Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. Historically, the summer months have been considered to be one of the most lucrative periods of the year for commodity traders, and once again this year has been no exception. Throughout this quarter, inflation, rate hikes and recession related macro events, they have become the three biggest and most dominant themes that have continued to present savvy traders with an endless flow of back-to-back trading opportunities on a weekly basis. This trend is here to stay and set to continue throughout the second half of 2022 as rapidly surging inflation, rate hikes and recession risk, they take front and center stage. Another week and another major central bank rate hike. That's undeniably become one of the most lucrative and predictable money-making opportunities of the current financial climate that we find ourselves in right now. Last month, the European Central Bank, they finally joined the rate club by delivering its first interest rate hike since 2011, and they definitely did it in style by surprising the markets with a larger than expected 50 basis point hike in an attempt to play catch up with the rest of its peers. A week later, the US Federal Reserve, they also raised interest rates by a supersized 75 basis points for the second month in a row, verging on its most aggressive cycle of monetary tightening since 1981. And then on Thursday, the Bank of England, they followed the European Central Bank and the Federal Reserve's aggressive footsteps by unleashing its first supersized interest rate hike since 1995. As traders know, every major central bank rate hike, that pushes the global economy one step closer to a recession. Those odds increased last week when the International Monetary Fund, they warned that the worldwide race to raise interest rates poses a significant risk of a double dip recession. A double dip occurs with two successive recessions happening relatively close to one another, and the second one happens because of compound effects from the first. The last time the global economy experienced a double dip recession was in the 1980s. Back in the early 1980s, the global economy entered a short recession that lasted just 6 months, followed by a 2-year downturn that stretched from 1981 through to the fall of 1983. According to Goldman Sachs, the parallels between then and now are strikingly identical. A very short-lived recession in 2020 is now looking extremely likely to be followed by a severe prolonged recession ahead. If history has taught us anything, then one thing that we know for certain in both scenarios, whether that's persistent inflation or recession, they ultimately present an extremely lucrative backdrop for commodity prices. Once again, almost like clockwork, gold and silver, they delivered surges to fresh monthly highs following the latest major central bank rate hike announcement, presenting savvy traders with an incredible and ultra predictable money making opportunity. That bullish momentum, it spilled over into other commodities, with aluminium, copper, palladium, platinum and nickel prices all soaring to fresh multi-month highs. These commodities have been on a tear, skyrocketing on every recent major rate hike announcement. Looking ahead, more big moves could be on the horizon this week, with inflation continuing to dominate and drive the markets. The biggest macro event the traders will not want to miss out on includes US consumer price inflation and producer price inflation data. Both readings, they come out prior to the Federal Reserve's highly anticipated Jackson Hole meeting this month, and as always have the potential to move the market significantly. If both inflation readings come out hotter than expected, traders will start to price in yet another supersized 75-point basis or maybe even 100 basis point move at the next FOMC meeting. It goes without saying that commodities, they are definitely one of the most lucrative and exciting asset classes that are a must-have in every portfolio. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week macro-driven opportunities, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we're only halfway through the year. Here are just some of the testimonials which have been flooding in from our clients, sharing their successes and achievements. Whichever way you look at it, the case for commodities in a well-diversified portfolio, it's never been more obvious than it is right now. So first of all, as we covered with you on Gold Asset of the Day last week, our expectation was that we would be in a range over the last week of 1755 to 1760 up towards the 1800s. In fact, that gave you a great opportunity to again reload at the start of the week as we saw risk off in the lead up to the Bank of England interest rate hike on Thursday. And with that, we did get another dip back down towards the 1760 handle before then breaking out over 300 points to the upside. But as I also mentioned on Thursday's report, you need to be very nimble in these markets. We keep taking the opportunity of these pumps higher, where we have essentially seen gold prices now, they're broken out over 1,000 points over the last 2 weeks to bank a windfall amount of profit. We've got 4 trades on gold, scale out as the price is pumping to the upside, make sure that we're constantly locking in profits. And then when you do get a sell-off and a tank to the downside, like we've seen after Friday's non-farm payroll, it enables you to then reload again at lower prices. Now, our positions at the moment, they're all built down towards the 1700s or lower. There's no need for us to add at these higher prices at the moment, and we're looking to continue to scale out of profits over the course of August. Now, it is encouraging that hedge funds and money managers in the last week, they've increased their overall net long exposure to gold by 9% in the last week. In fact, with silver, they've increased their net long exposure by 4%. Of course, in the last week, we did see quite a significant breakout on silver, where it broke out from $18.20 per ounce all the way above $20.20 per ounce. It had a $2 move or a 9% move to the upside the previous week, and then as you would expect, we have seen consolidation in the lead up to non-farm payroll, exactly as we talked you through the possibility to see profit taking in the lead up to that non-farm payroll, that you would get volatility off that. And if you did get any dramatic pullbacks, that gives you yet again another opportunity to reload lower. So as we go into next week, I would have it on the radar that we may well get a little bit more of a pullback here at the start of the next week. We have to see if we're going to see any follow through on the dollar. We went long the dollar with our clients at the start of last week as we started to see geopolitical risk intensify with Nancy Pelosi visiting Taiwan, and with that, gold broke out above 1 month highs, and the US dollar also surged over 100 points to the upside on Tuesday, and in fact it surged again on Friday's non-farm payroll. So our dollar position is looking really strong at the moment. What I can't rule out at the beginning of next week, it's possible if the dollar wants to follow through and break out again back towards the swing highs here, that would put some pressure on energies and also on commodities as well, which ultimately I would perceive as a buy opportunity to reload and stack positions at lower prices. We're already in very low on our positions anyway, on gold, on silver, on copper and so forth. But if we were to see any sort of pullbacks on this market, particularly silver, going into next week, I would be keen on any moves back down towards the 1850 to 1800 level. We may not see that sort of a magnitude of a sell-off, but if we were to break back down towards those levels, these would certainly be zones of interest for us as we go into next week. Our copper position, when we have 4 trades on this market, is looking very strong at the moment. And in fact, copper, it broke out over 2% on Friday, unlike platinum and silver and gold, which all had a bit of a pullback here on Friday. So gold pulled back 1% after non-farm payroll, silver pulled back 1.64%. However, copper had a very strong move into the close. That was also relevant to platinum, which rose 0.3% on Friday. In fact, platinum over the last week and a half, it's up 5%. Over the last 3 weeks, platinum has surged over 1,300 points to the upside. So we've seen a very strong breakout move on platinum, leading the metals higher here. That's also been relevant to palladium as well, which shares correlation with platinum, which was up over 2.6% on Friday, and also very much like platinum, putting the lows in the middle of July. Now moving over to oil. So I do see opportunities on oil. Whilst it remains down here at $88 per barrel, my expectation is between now and the end of August, you are going to see higher oil prices. I'm not expecting the price to stay long at $88 per barrel or lower. I'm looking at further accumulation on this market. We may get it. Can't rule it out, a retest back down towards $85 per barrel, which I would see as an opportunity if we see that get tested over the next week. But expectation is that we will see higher oil prices between now and the end of August. We are seeing one of the greatest wealth transfers ever in history in this new era of economic change, which we find ourselves in right now, with rapidly surging inflation, the cost of living rising, energy, gas and food bills all soaring. It's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose money when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills. And there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain that ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it's the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, utilizing outdated technical analysis and gimmicky technical indicators, that will not work. We're no longer in the 1980s. We're in 2022 and the age of data. Every industry right now, including the trading and investment landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get real-time trade ideas, access to our institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.